Good morning and welcome to the Euro Trade. I'm your host, Marcus Stalker D. If you're new here, I have been trading for about 18 years. And I specialize in some of the more unusual products. Today I'm looking at gold because gold is just relentless. And there's a development there. But before we get into it, I will urge everybody to have a look at the risk disclosure that Bruno posted to make sure everybody's on the same page. And then we can crack on. All right, so let's have a look at the larger time frame. So yesterday, despite this little squiggle down, the gold just went back to all-time highs, and it seems to be continuing the relentless push higher. So I don't really want to fight that, especially at this time of the day. And since we actually rejected the ADR low while I was getting ready, and then promptly went into the extension of the initial balance to the upside with some positive delta, I might want to look towards the highs of the day and maybe even 4,200, where some longer time frame core resistance areas are from the options chain. So we do have another gamma wall at 4150. So that was just broken as if it wasn't there at all. And we did have a pretty decent volume upon the reversal from the ADR. Now, I might be a little bit too high up here, so I might be able to try this again if it continues to reverse. But usually around about this time of the day, gold typically goes into a bit of a range before it continues higher as we get closer to LME. But for now, again, just a little test trade to see how the price action behaves whilst I'm in a position. And as always, I'm not a high frequency trader, and I have a long-term accuracy of about 43%, which includes all of the bad times, good times, and everything. But I do have, months where I'm 66 to 70% profitable. Now, I always go for a slightly higher risk reward, but I'm not talking crazy, right? I'm talking 1.5 to 2.5, and then every so often the market provides us with an opportunity to run what I call semi-swings, which is like an intraday swing position where you would aim to position yourself really, really well and then just hold it for a few hours to get every tick possible. This is not that sort of a trade. Why? Because first of all, the test of the ADR happened earlier. So where I'm getting involved, it's kind of in the middle, but because we're extending the initial balance higher with some single prints left behind, and we've just gone above VWAP, there is a chance that we go all the way back up to where this thing came from because of those 4,200 calls. So let me just plop in a line here as well. I'm gonna make this solid. And then obviously we had the 4150, not 45, but 4150. That is matching this VWAP exactly, almost to the tick. So strength above VWAP, retest, and I would actually like to see this go into yet another leg higher. Is it going to happen during this stream? I don't know. It might be too early for that, especially if we end up in the sideways movement that we usually see in and around this area. But the risk is pretty low. I'm only using $70 of risk plus some commissions. So we'll see how this plays out. Now, on the way to the all-time high, back to the all-time high, we do have a couple of GEX levels. One of them is causing trouble right now. That's 4160. It's a GEX 4. And then we also have GEX 3 up at 4175, followed by implied volatility top at 4188. And then above that, it's the longer time frame calls. So we'll see what they want to do here. If it goes below 4150, that is the invalidation point for this particular setup, which is the extension of the initial balance to the upside. And the ATR is absolutely monstrous at the moment. It's actually 250. Now, ATR and ADR are slightly different. I look at the ATR on a candle by candle measure, which means it's taking, I like to take 9 previous candles, and then it measures whatever the average of that is. That can provide you with a decent scale-in opportunity. Like, let's say we have this candle right now, and then if it goes all the way down to 250 intra-candle on a 30-minute time frame, that can actually be a pretty decent scale-in area for the longs. Why? Because the intraday candle, the intra-candle average has been touched. But usually it works best if you have some sort of an extension of the initial balance and you're looking for a more, this is the mean reversion trade, but I am also looking for a bit more of a momentum to go back right where it came from. What time was this? This was right after Tokyo closed, or half an hour before. Yeah, Tokyo closed, and then they smashed it down. Very normal. So for now, it's doing what it's supposed to be doing. Now, granted, with the ATR at 250, 70 tick stop might be a little bit too small. And at the moment, I'm looking at the averages. London has actually climbed up to 317. That's looking at average session ranges. So that's a monstrous amount of ticks available for London for this product. And then we also have New York session, so the COMEX session with 513, with the overall ADR across the last 10 days sitting at over 700. So that's insane. So this is why I don't know whether my stop is actually going to be good enough here. But if it's not, then I will try to scale back in slightly lower. And I've decided to commit to this particular little trade because it's only 70 bucks, so who cares? All right, let's have a look at copper. Copper might be a little bit more sane. Where's my copper trade? Copper trade here. Okay. Now, copper looks weaker to me still. Primarily because it overshot ADR. So its own ADR was at 501.25. 501.25. Right, let's try this gold trade again. We'll see if we can get a slightly better entry. This is a test of the initial balance high here. But yeah, because it's a massive range, you don't need a lot of size at all. So the risk is kind of defined. Let's run this up here. But the target zone, if this starts going back up, is anywhere between 75 to 4190. So yeah, ADR low was on copper at 501.20 roughly, and it still really hasn't reclaimed it. It went down, exhausted the average session range for the London. And let me see where the low is. Yeah, so the low is actually the low of London on copper. Let's call it overnight low rather than Asia low. Overnight low. COMEX levels all the way up on copper at 412. What? 512. Need caffeine. And then value high all the way at 516.90. Now, with this overshoot of the ADR low in copper, we now have the ADR high on the opposite side of that at 509.75. And then the overnight high, it just opened up and started going down. So it's actually not too dissimilar from the COMEX high at 517.80. And let's do the same on gold. And then high is up here. Okay. These are just my orientation points. Okay. Medium low. Now ADR high on gold. Similar story. 41.76. Do I have? Okay, 41.76. And then I'm just going to do the GEX levels here as well. So GEX 4 at 41.60. And then GEX 3 at 41.75. Right around this opposite side. Of the average daily range. So we'll see what happens. Anything else of note? Let me look at the energies markets. Maybe for later. But yeah, gold bulls just totally relentless. 41.46. When did I enter? Okay. So we'll see whether gold VWAP can actually give us support here for further upside. And if not, then if not. All right, let's have a look at crude oil. Don't really see anything in crude oil right now. It's just going down, down, and down. Just need to update the levels here. So crude oil. Let's move to this chart here. Crude oil. I have a cavalier who wants to come inside, but he's not allowed. Well, he is allowed, but I can't be bothered getting up right now. Now for crude oil, COMEX value low very far away. At the moment, it's about 2% away from it. Value low is at 59.45. Very, very far away. Value high sitting up at 59.80. ADR was exhausted. That's unusual for crude oil for this time of the day. And it was at 58.37. So if that decides to get reclaimed, there we go. Then maybe we have a long in crude oil at some point today. I'm still battling a cold, by the way. Our equity futures already ADR range bound today. Let's see. I mean, I wouldn't say so. There's ADR low is exhausted, so just I don't have NQ on here, but I do have it over on this side. So ADR low was actually exceeded. That's also very unusual for equities. And if it doesn't reclaim that with some strength, I wouldn't fight the downside move because that can be an outlier day. So maybe a test of VWAP on NQ up around 24,782, and then perhaps seeing it bleed back down. On the daily chart, we have actually created what you would call an established swing after this big drop on a Friday. And as a result, we now have the Q points, which are established swings. I'm basically looking at the ups and downs and then how the swing behaves. And we have the Q high rejection now at 24,862. But we also have a 4-hour established swing that is sitting with its own quartile high at 24,823. So that will be a similar area to that value low for London and VWAP. It's a bit higher, but still. So I would say we have maybe an outlier day developing in equities because of that. If the ADR doesn't get reclaimed, and on NQ ADR was at 24,683, so is it range bound? No, it is not. You would expect London to still be sort of in the middle of that range. If it starts to go over that and it starts to ignore it, that's when you can go, whoa, equities already reached ADR and went lower. What the hell? So immediately your suspicion that you may be looking at an outlier day should be inside of your plan already. So be very vigilant today because we may have, we might still be inside that big candle, but for now, the day is saying that we are effectively rejecting the swing extreme. For now, and obviously it can change. One Trump tweet and everything changes. But yeah, certainly interesting. I would have expected NQ to go back up higher before it does this. And it still might, it still might. But as it stands right now, we have the average daily range that is exceeded and causing trouble. So let's have a look at the levels from the options chain. Just gonna need a minute. All right, so it's also so NQ is tagging the implied volatility and reversing. It kind of looks like what gold did here today, but with the implied volatility low, which was located around 620. There is a put support at 24,700 from slightly larger time frame option positioning. And then nothing really to the upside until we reach 24,900. So yeah, be careful today. Now, obviously, it will depend. I'm only talking about the general observation of price movement. You know, if you're more of a scalper, then, you know, you might have opportunities on both sides. But if you're more like me, where you're looking for a slightly bigger chunk of the move rather than going in and out, in and out, in and out, then you want to work with a day sentiment rather than any old tick that might come your way. Right, we've got 4 minutes until this TPO on gold ends. I would like to see it pretty much push into a new high after the 4-minute mark. And then if it doesn't, it means that we have another day where gold is just not doing anything. Right, so let me just have a look at the crude oil options. So crude oil right now tagged obviously the ADR, but also the volatility, implied volatility low, which was sitting at 58.17. So maybe we do that for a second. And where are the levels? It's definitely trying to reclaim ADR. So we have GEX4 at 58.50. We have GEX1 up at 59. GEX3 at 59.50. And then we have some put supports at 60. And we have a whole bunch of levels there. Gamma wall all the way up at 61. I'm usually short biased on crude oil, so if we get a reversal, so I don't really like doing longs on crude, that especially not this early on. If it goes all the way back up to anywhere between 60 and 61, I might want to get involved in a short if the right time of day comes along, which is usually after 9 a.m. Central and into the Euro close. If not, then I might want to look for a test of VWAP and just go with the trend, so not fighting the downside on crude. But I'm not going to be trading crude outright. If that happens, I will be using RBOB or maybe even heating oil. But yeah, I don't trade crude oil this early. Crude oil, to me, is almost exclusively NYMEX type of a trade. Maybe on RBOB because it's much more liquid. If we get closer to NYMEX, like let's say pre-market, about 90 minutes beforehand, I may have a position. But usually what I like to do is if it goes into an extension of the initial balance to the upside, I like to short that. So again, not quite what I'm seeing today on energies. But yeah, let's see what crude oil does. I mean, energies are just relentless. Like gold is relentless to the upside, energies are just relentless to the downside. And if we look at the weekly chart on crude, you will see what I mean by that. And I mean, the way this looks, if this 57.80 little rally-based rally demand doesn't work out, I'm looking at, you know, 54 and maybe even lower towards 50. So yeah. And then maybe I'll do like an option trade, maybe just like a long call to keep for a couple of days. Yeah. Greg says, I think I will not trade today, afraid of a Trump tweet. Yeah, don't be afraid of Trump tweets. You know, as long as you have your stop loss in and you're not like oversized like a crazy person, it shouldn't hurt you. You know, and in times of great volatility, you can't trade with size. You know, size and volatility, and you guys, you know, the entire chat doing 1 million trades per day, bar like maybe a few individuals. Oh, Thomas says, tag you on Twitter, update a proper picture just now. Happy Tuesday. All right, I'll have a look at it in a minute. Obviously I'm not feeling the best, so I'm kind of fighting it off. But yesterday I had like a low grade fever, which wasn't great. And ever since I came back, I think I might have caught something whilst I was in Belgrade, and it's been a little bit annoying because my throat is a bit scratchy. I kind of generally feel a bit down, just like meh. But I'm not like full on sick so that I have to like be in bed and stuff. So I'm still functional, still working. But yeah, it sucks. It's that time of the year, everybody gets sick. I do have an overactive immune system, so that usually, like, while it has its definite drawbacks, it tends to protect me from getting super sick, and it's the most bizarre thing. The last time I was sick was like April 2022, like properly sick. Obviously you catch bugs and stuff, but they don't attack me properly. Is that a good thing or a bad thing? I don't know. Yeah, so for those of you asking, yeah, just I'm not upset, just a little bit sick. So yeah, nothing to do with, like, my mood is okay, but you know, when you have slight aches and pains and everything, you're just like, bleh. I know that I'm usually my happy self, and you don't see me ill very often. But yeah, I don't really take illness very well. Like, I mean, does anyone? But yeah, it's just because of the chronic illness that I have. It always kind of worries me whether it's going to push me back into lower baseline than what I have right now. So, you know, it's always a worry. Like, oh no, am I going to end up back in the dark room with like earplugs and unable to move again? Because that wasn't fun at all. I had 18 months of that. I don't want to go back. Yeah, I'm just trying to be gentle to myself. I'm going to be on fast markets later on though, so I do need to somewhat conserve my energy. Although, you know, there's other people on the stream, so I don't have to talk for like 2.5 hours. So, and you know, once we get to that time of the day, I'm going to give myself a challenge. So here's what I've been dealing with whenever I go on fast markets, because there's a lot of stuff happening, and sometimes you have scalpers around that are doing like 1 million trades while you sit there and wait for your setup. So I'm going to challenge myself today to wait for my setup and to not be thinking, oh, you got to do a trade, you got to do a trade. So I'm going to be very, very patient, and that's going to be my challenge for me. I know that some of us who are on TopstepTV, we have different challenges to people who are just at home, sitting there and just doing nothing. Like, for example, me, I don't really trade gold at this time of the day, you know that. But I always feel like, you know, I'm obliged to do a trade, because otherwise what are we doing, right? And I've said it many times before, these Euro trade shows were supposed to be DAX trading, and DAX moves a lot for this time of the day. Gold most days is just a complete snooze fest. It kind of moves very well for Asia, and then we get into pre-LME time for like 3 hours, and then gold is just like range bound, just sitting there, just doing nothing, having, you know, a bit of a chill out session. It's like, come on, do something. I need to trade. So yeah, and because of that, you know, obviously I've sized down a lot for these streams, just so that I can actually do a trade, and then if it doesn't work out, I don't have a massive hole to dig myself out of. So that's kind of my biggest kind of mental thing at the moment. Wanting to do a trade, not having the right setup, on my hands on most days. This is a bit different because the ADR low was a definite reversal. And then they tried to, on the 30-minute chart, they tried to reverse. But then we ended up in a candle with a big buying wick and still above VWAP. So just going to keep tracking that. I'm not that keen on the fact that all the single prints have now been taken out. But because we ended up nearly at the top of the profile for the London session, I'm willing to still give it time. But yeah, this is a very different price action from my post and my cut. I do need it to stay above 41.50 though, because if it doesn't, then it means the gamma wall is reactive and this trade is wrong, which is okay. So yeah, reminding everyone, 43% accuracy through all the good times, all the bad times. So not just taking a random combine or, 2 weeks of an XFA, but actually taking in the last 18 years when I was smashing it, when I wasn't smashing it, when I was just okay. That comes down to 43%. So all of my risk models and everything are based on that number. So rather than me going, oh yes, I'm going to be 66, 70% all the time, that's not how you create a risk model. You create a risk model based on the worst case scenario, or maybe average numbers rather than best case scenarios, which is what most people in the retail world do. They take their best performing days and they're like, that is my accuracy. That is not your accuracy. I will promise you that. Trade for many years on end in a single account or track it in a single journaling platform and see where you're at. You might be unpleasantly surprised to learn that your accuracy is nowhere where you think it actually is. And then if you look at that and you match up what your risk reward is doing, if you're actually below 56% most of the time, you need positive risk reward. If you're maintaining 65, 70%, you can have a negative risk reward. But we're talking years of sample size, not just an isolated week or two or a month or two. That's your real accuracy. But no, what's happened these days is because of all the resets and stuff and, churn and burn culture that we're seeing in the prop world in the last couple of years, especially. People are used to, full porting it through the challenges, and then they don't quite understand that their risk of ruin is too high for the funded accounts, and they don't last. So we're trying to change that, through the VIP program, through us running these shows, and just basically trying to educate on how you should be approaching your own risk model. Yeah. And she says, I followed you for more than 1 year, never saw you like this. Yeah, it's because I'm not sick very often. That's why I'm just a bit, I'm always like full of energy. I usually have my double espresso in the morning. Today I couldn't even handle like half a coffee because it just doesn't feel right, So yeah, I'm still a bit, bleh. But I'll be fine. Don't worry. We can't always be chirpy, happy-go-lucky. And the scratchy throat and having to talk as well is not really. Maybe I should have had a painkiller before I came on, but I didn't really think of killing my gut biome that early in the morning. Who needs the good bacteria, eh? Greg says, I had a nice trader going Friday, and the Trump tweet flipped the directional price viciously. When his tweet flips the script, it overrides the current direction. That is definitely true. Just looking at Delta on gold. It's sort of tried shaving off a little bit, but now we're right back at plus 250. So Delta's still holding. It's just these wiggles are really fierce. They're enormous. Like this one candle on the 30-minute time frame. The size of it is nearly 160 ticks. That's insane. So yeah, we'll see. In chaos, there's opportunity. You know, size down, increase the stops, and see if you can learn how to trade through high volatility. I had this 3 times already, maybe 4. So we had the credit crunch. That was like a year into me doing trading seriously. A year into it, like the world melts down. Then in 2012, we had the European austerity measures that started off volatile and then completely died a death, which pretty much got me out of Forex and into futures. Then we had COVID. Now, COVID was fun because by then I already had, I suppose, the tools to deal with the high volatility, because by then the way I do things was pretty robust. You know, the reason why I went to scalable stops is because you need to be able to scale your stops to the volatility of whatever the product is doing. If you're not doing that, it means you're not working with the market. You know, I've had someone in the previous VIP group who was like, well, I always use 10 points on NQ. And I'm like, dude, we're moving like 2,000 points. And when you came up with your 10-point stop loss, it was moving like 700. That's an increase of like several times. And your stops are not reflecting that. You can't trade on a 10-tick stop. So I gave him a challenge to go into a practice account, go down to 1 micro, and increase the stops to something more sensible, like 35 points or something. And guess what? He was like, oh my God, I'm pleasantly surprised. I can actually stay in a trade more than 3.5 nanoseconds. Because the problem that they were having is that they would enter a trade and they would just get taken out like that. So he was like, I'm not going to trade. And I'm like, well, so what? Now if this increase in volatility is here to stay, like it was after COVID, we had, you know, NQ that was, like back in 2014 when I really went deep into prop, NQ was only moving 75 points on the day. Points, that's like what, 300 ticks? And then COVID came and it started just going bonkers completely. You know, and then that stayed. You know, we still have most of the days, like you guys say that NASDAQ is quiet now whenever we have a 75-point range. And yet that used to be the norm. So after COVID, everything expanded. So I pose the question, what if this volatility is here to stay? You need to learn to adjust. If you don't adjust, so how did Mick from the risk team say? Adapt or die. Not very often that Mick does an emo thing, but that was a very good way to put it. Adapt or stop trading. It's like there's no other option. And I would want to believe that anybody who goes into trading, you're already a person outside of the norm. You're already not doing everything that other people do. You're looking for more, and the markets intrigue you and you want to learn, right? So that doesn't match up with oh, I'm just not going to trade now. Just going to sit here and, you know, watch the markets do their thing. Like, it's okay to be in observation mode for a while, but then you need to try it. You need to go, okay, well, let's see, rather than me using 10 points for a stop, let me see if the ATR was telling me something different. This is how you create a robust trading system. Something gets thrown your way because the markets always change to a degree. And the changeable things are usually volatility, so the range that we're working with. And also, you know, the momentum that you might experience as a result of that volatility or lack thereof. If we don't have volatility like crude oil did for the last sort of 18 months. So, you know, if you're of the mindset that you're always using a particular stop size and that's just how you do things, you need to go back and see if the period where you sucked had something unusual about it. And then once you realize what that is, usually you come to a conclusion that your stops need to be scaled to the volatility. And then you come up with a more robust way to look at the markets. So if you're not using volatility scale stops, you see that, you know, as soon as Trump talks, it has a knock-on effect on volatility for days after. It's not just like a one-off. And that means the ranges get expanded. Now, my ADR levels, they still work because I have a weighted average that is taken over several sort of periods, 20, 10, 5, and 1, and then we sort of smush it into a weighted average. So whenever there's an increase, those averages will increase pretty quickly as well. So it's not going to take you like 2 weeks to get the new levels while everything adjusts. And again, that was also a result of me doing the initial ADR and then going through a volatility increase of the market and me going, this is just overshooting every day. I need a better way to do this. And then we worked more, and I asked my team, I said, is there a way to somehow come up with a weighted average? Maybe not the last 3 days, but maybe we take like multiple periods or something, like we can just brainstorm it. And then eventually we came up with something that that was quick enough to show you the new range fairly quickly, but not like immediately. And then if you want to do it immediately, like on the day, you have a TR. Like you don't need anything else. It comes with every single platform. And in fact, my Topstep X here, if you look, if I just block myself out for a second here, if you look at the bottom, the ATR is here. So on MGC, it's actually less than GC. So it's saying 173. So what does that mean? Well, it means that in a single 30-minute period, I don't know how much you can see that. That's pretty horrible colors. Hold on. Do I have anything else? No, let's see. Yeah, okay, so 173 is what you're working with. Why? Obviously because there was one big candle. So remember, this one counts 14 periods back. So it is taking in the Asia ranges as well, but then this big candle is also a part of that equation. So, you know, we have tools. We have tools to figure this out. You just need to use them. And, you know, some people say, well, it's a lagging indicator. Yeah, but it's an average. So, you know, if an average candle tells you that on a 30-minute you can expect a movement of 173 ticks, and you're trying to use 30 ticks in gold, what are the chances that you're going to catch a big swing move with this thing wagging up and down into wicks nearly all the time? So, you know, it's just something to think about. Yeah, may I ask you about your biggest trade and your biggest losing trade? What's the story behind it? So my biggest trade it was on crude oil. I think I mentioned it yesterday. It was 86,000. Wasn't even in with too much size. I think it was like 2 or 3 minis. And the story was that the Iraq conflict started happening, and it sorry, somebody's calling me. And it effectively pushed the crude oil into a huge uptrend. So I noticed single prints on the profile. They were very strong, and the price just kind of kept, every time they tried to sell it, somebody was pushing it back up and pushing it back up and pushing it back up. So I recognized that, and I decided to jump in, and then I held it for all day. I think that was my longest trade and one of my best intraday prop trades. So that was 86 grand. And then my biggest losing trade was about 220,000. At the time, I was trading a pretty large account. It was FOMC, and I was right on direction initially. It went my way. But then, because it was a live account, there was nobody to take my order, and then they just weren't, I couldn't get out, basically. And then, as FOMC goes, it turned around, and then it went past my stop loss. Beautiful. And instead of me losing 40 ticks on whatever I was trading, I think it was ES, I lost 140 ticks, and it was a big size. And yeah, it was 220K down the drain. It is the reason why I don't trade FOMC anymore. So there's that. Live and learn. It was many years ago now, many years ago. So, but you know, in relation, so here's the thing: in relation to the size of the account at the time, that actually wasn't a massive loss. Like, it was a big dent, obviously, but it wasn't like, oh wow, I've lost everything, because it was a massive account. And the one that hurt more, actually, it was a 70 grand loss in the first 2 years of my trading journey. And I wasn't trading for a firm, I was just trading with my own money. So I spent 2 years building up an account from 2 grand up to 70 grand. I was a swing trader. And then I got totally biased on one swing trade, and I kept trying to get in, getting stopped out, getting back in again, and then I removed the stop loss, and yeah, I lost the entire account. That one hurt more. Like, numbers wise, it wasn't as big, but it's just a situation at that point. That was like all of the profit that I had for 2 years. So it literally felt like my world came crashing down. It didn't, obviously, but it definitely felt like something changed in me that day. Whereas the 220K, that was painful. It was very painful, but it wasn't nearly as much. It was like, I think it was about 10%, maybe 11% of the account. So yeah, it's still painful because of the amount. But yeah, it just changes you. It just changes you. I think it makes you more resilient to losses. And then you start realizing that no matter what you do, like, this is a risky business. And, you know, you shouldn't be trading with massive amount of size. But I never, like, the funny thing is, in both of those occasions, I never lost control over sizing, like, because the size was appropriate for what I was doing then. It wasn't like, oh, it was FOMC and I suddenly plowed in like 100 and something lot. Yes, I was trading 100 lots like all the time. And back in those days, and you know, it just never, I was still a new trader, right? New intraday trader, like first 2 years of my prop career. And I didn't know you can get stuck in a position, because I thought, stops are guaranteed, and nobody told me. And then when there was nobody to take my order on the other side, yeah, that was a huge lesson. But at the same time, you learn what not to do next time, right? So if you notice, everybody who's been in this game for a while, none of us are too keen of doing FOMC positions, because we've all had one or two of them that did not play out. And the hilarious part, when I was running my own streams on my own channel, and before I got sick, I actually did them daily, all the way from like 2021. So someone said, Dee, FOMC, you should definitely get back to it, because it's you just look at the levels on larger time frames and they work. And I was like, dude, that was not the problem. That doesn't matter how much your levels work if there's nobody there to fill your order, which was what happened to me. You're stuck in a position and you're left at the mercy of whatever they're going to do after that. You literally have zero control over anything. So I had full control over the sizing. I had a stop loss in place. It didn't get filled. And it went my way. It bloody went my way. But then did a complete turnaround, and yeah, it is what it is. So yeah. Ross says, Dee, how do you resist the urge to overmanage trade? I seem to have the urge regardless of size. Whenever we pause on a move, I always think I should cut. So that would be a matter of finding something else to do whilst you wait for a trade to work out. So if I sit here, and if I'm, for example, like, first of all, you have to have a pretty systematic way of knowing what your setup is. So rather than just, oh, I'll catch a bit of momentum. See, the trade that I'm in on now on gold, I know that it has a decent probability behind it. It's not like 70-80%. It's about 65%, right? That we could go back up to the high of day in this sort of situation after we rejected ADR and after we went into an extension of the initial balance, okay? But, if I was just in a momentum trade, I'll be like, should I cut it? Should I cut it? But the experience that I've seen these things play out over, not just staying in it for like 15 minutes and then going, oh, well, it's going down. Oh my God. Not having that twitchiness about it and knowing what comes after in the majority of the cases when I've seen this, that's what's basically making me not freak out and just kind of stay calm. I tried again. And, to me, I have zero urge to take this off before we at least go into a new all-time high. And at the very least, like my first target here would be 41.75. So it will be up here. Because there's nothing else. And I'm systematic in that way. Because if I show you how that trade looks now. So we extended the initial balance. This is the 30-minute VWAP on the big contract. This is the ADR. And this is where we came from. And then we have calls up at 4,200. And we know gold is a crazy one. And can it go all the way back down into a failed auction? Yeah, definitely a risk. But if that happens, I don't care. Why? Because that's not my setup. It's not my setup. The setup that I'm seeing here is not catching RBOB momentum. It's the reversal of the ADR and then a continuation. So, it's a confidence thing, having lived through my playbooks and knowing how they look when they fail and knowing what they look like when they are about to succeed. Okay, and then if it doesn't succeed, if it doesn't rotate all the way up, I'm just going to take it off. Why? Because it's like, well, it didn't do it in the time frame that I expected it to. And I have a time frame for that. So I'm a huge fan of time stops. So rather than pure profit targets, I also have a time-based target. So let's say we get to LME, in whatever, an hour and something minutes, and we're still hanging in this area. That it didn't do what I expected it to do. It might do it still. So if I'm willing to hold this, through COMEX initial balance, which I'm usually not, because the first half hour usually has a head fake. But even then, if I stay in, if I carry over a position to the next session, the first 30 minutes going in my favor would mean that the next 30 minutes is going to go against me statistically, because that's just what happens. So I can use that push to time stop out the trade wherever it is. And if it goes down or if it stays where it is right now, I can take it off probably in and around, let's say 12:30 would be the latest that I would hold this if it's not really moved more in my favor. So, it's really down to confidence and experience and, how well your playbooks are defined. So my question to you is, do you have defined playbooks where you've seen them happen over and over? If the answer to that is no, that's probably the part of your problem, not being able to hold trades. Because even if you just run a small back test to see how that setup played out, that will do more for your mindset than anything else. Now, obviously, living through your trade in real time is the best thing, but it's slow because you have to wait for the setup. You have to then stay in on the setup, see how you feel whilst you're in a trade. That is the biggest thing that I think very few people talk about. How do you feel when you're in a trade? Are you relaxed or are you twitchy? No, I will be honest with you. When I'm on fast markets, I always feel like I need to trade more. I don't feel the need to take the trade off, but I definitely feel the need to trade more. And I said to Andre last week, or last time I was on, whenever that was, I said, I need to stop doing that because it's, it's annoying to me because it's like I should be waiting for my setup, but I'm like, oh, let's find a trade. It's like, it's not even my time of day. What are you doing, Dee? So to me, today, the challenge will be to wait for my setup. If there's no setup during fast markets, I'm not going to take it. So set a task for yourself. Do a challenge for yourself. If you've seen your playbooks, do same things over and over. And it's a high probability setup. Let it go. I think a lot of us have this control freak inside of us. and you want to control everything. Well, sometimes the best thing to do is just not to control it, just to put your risk and to just go, whatever happens, happens. And actually, whenever whenever people come to me for coaching one-on-one in Market Stalker's side, if I see that somebody's over managing a trade and as a result, they're always coming up with 1R or 1.5R, but then the trade runs to 3R, which was their original target, I actually put them on a do or die program. What's that? You get into a trade, it's systematic because of the way I teach playbooks, they're all systematic. What is the playbook? Define it. What sort of a setup are you in? Oh, I'm in a failed auction from value low. Okay. Let it go. Stop loss or target. Nothing in between, right? After you've done that for a while, you now have a set of data without you messing around with the parameters, without the human factor messing up the numbers. Does that make sense? Because what you expect is one thing, but then we introduce a whole bunch of variables by doing stupid things with the trade. It's like, oh, I should have stayed in. So why didn't you? Like, are you doing data gathering for the setups and seeing how many times they work without you actually messing around with them? Or are you just a grasshopper who can't resist getting a few ticks out, even though you know that the setup in question has got 300 ticks in it? So that's the question that you need to answer for yourself, but then you also need to make sure that you stay in and that you do the combination of back testing, forward testing, and naming your setups. So naming setups is a big thing for me. I have about 5 core setups, and then I just basically flip them around as the situation on the day requires. But if I'm in a trade and I can't define it, that's the first sign that I'm losing the plot. So I'm not immune from it, but I can recognize it. So when it happens, you will never be able to get rid of all of your Muppet moments. But let's say that, you know, I'm looking at a setup and it's nowhere near a level. It's still inside the initial balance. It's not a failed auction. The levels of interest are all like very far away. And I go, I'm going to do a trade. And then you enter a trade in the middle of the range, on a range day, away from all the levels, didn't wait for a liquidity grab, didn't wait for nothing. What setup is this? And I just go, it's not a range trade, it's a range day. It's not a momentum trade, because we don't have momentum, because it's a range. And immediately I go, yeah, that's a nonsense trade, D. Close that sucker out. So then I recognize it and I close it out for whatever, you know, sometimes it's a scratch, sometimes it's a small loss, sometimes it actually wins, which is probably the worst case scenario, because then it teaches you that it's okay to break the rules. But whenever I can't, because, you know, I have 5 core setups that account for everything. A mean reversion, failed auction, so attempted move and then a reversal, continuation, like we're seeing now on gold, with the trend usually. And weeb and seeb. So weeb is basically weakness inside initial balance. Seeb is strength inside initial balance. But then I also have variations. Like let's say this is a breakout from the initial balance. You can see this red area here. It's my my initial balance. And you can have the test of IB high in a continuation. You can have the breakout of the initial balance if you're kind of expecting it to break out. I'm not a huge fan of those because I think on a lot of the days gold will actually pull back into the initial balance more than it has today. Today it just kind of shot upwards out of a cannon. And then I have entering late on a retest of another level away from initial balance, but it's all sustained auction upside. All of it comes into that one single playbook. It's just variations of entry and entry techniques. Then I have the mean reversion, which is a form of a sustained auction, but we're playing to the distribution curve. This one is not that. We're going away from the distribution curve. So it's naturally slower, usually. The mean reversions are horrendous. The mean reversions are quick. They're followed by volume, usually very unusual volume, and they're over in 1 or 2 TPOs. So within an hour, 45 minutes is usually my lead time for mean reversion trades. And then you have normal reversions from the ADR. They're slower as well, right? They are like, they touches it, sort of kind of either fizzles out a little bit, then reverses, and then it sort of fades away from it. But it's all, again, a form of a mean reversion. So when you define your playbooks in that way, and you can name the setup, everything becomes much clearer. Everything. And you no longer have to wonder, where's the target for this? It's like you have a target. Why? Because you watched it happen 100 times before. Now, if you're not there in your journey yet, I would urge you to develop that. So rather than you being a grasshopper and taking off the trade for a few ticks, rely on data. Numbers don't lie, right? But there's data for the price action observation. What did the price actually do? And what did you do as that was happening? Those are 2 different things. And the second one has multiple variables. That's fear, doubt, FOMO, like a whole bunch of stuff that is not on the chart, but it's inside your soul. Now, that is also part of your system. How you feel in a trade. Are you comfortable? Are you not comfortable? Are you fearful? And why? You need to explore that. And usually it's lack of confidence, because the setups you're taking play on the momentum that you momentarily see, but they're not actually clearly defined. So define them. The fear, doubt, FOMO, it will all, at the very least, subside, if not completely disappear. Best case scenario, right? Completely disappears, but that takes probably years to get there. Magnum says, I would have cried like a baby if I lost 220. You know, it's all down to situation. At that point, like, look, if I lost 220 maybe just 7 years before that, that would have been like, oh my God, like, what's going on? But it was all, like, most of it was, no, actually all of it was profits. And not all of the profit either. So it's like, what, am I supposed to cry over 10%? So let me put that into perspective for you. It's kind of like you getting a $2,000 XFA, so 50K, and then losing 200 on the day. So, sorry, yeah, 200 on the day. So it's not, in the grand scheme of things, it's not that big of a deal. But just the sheer amount of it was obviously painful. So yeah. Nick says, hey D, can you explain what ADR is? Average daily range. So that is calculated over the previous at least 10 days, sometimes 14. And my way of calculating ADR is almost like a volatility band, where it tracks highs and lows in the day and then plots them until one side is exhausted. It's my twist on the original ATR measure, because I noticed that there was a point where it just decides to stop. So as I was looking at that, I noticed, and it was in crude oil, so I noticed that crude oil would go to 250, 300 ticks, then it would reverse, whatever direction is on the day. Then again, the next day, 270 ticks, then it reverses. Then the next day, 230. So I was like, okay. And I noticed the same thing in euro dollar back in the day. They had 150 pips per day on average at that point. So I thought to myself, so if this thing moves X amount of ticks every single day, can I predict that? And how? And then I was talking to a friend of mine, and he was like, well, yeah, I mean, you have the average ranges, right? And I'm like, average ranges? But you always had ATR as a part of the whole thing. So I looked at it on the daily chart, and in the very first instance, I was using ATR on the daily, and then I would be plotting the levels manually through an Excel spreadsheet. However, after a while, I realized that I actually wanted to have a more dynamic measure rather than just a line on the chart. I noticed that on some days it would overshoot and then kind of come back. And I'm like, I think this is down to the fact that I'm just using a pure average. So what if I start tracking highs and lows on the day, or session highs and lows on the day? Because I have the average session range that only takes the RTH, regular trading hours, over the last sort of 10 days. So not the full 24 hours. So that was an additional thing that I created when I went into prop. And, I didn't, come up with it maybe, but I'm the originator of discovering how to use these properly. So if that makes sense to you. So I would never claim that I invented the ranges of the markets or that I'm the algorithm. But I do claim that I was the very first one to identify it and to start using it for the purposes of intraday trading. So that's why I say I'm an originator. I'm not a creator. I'm an originator of something. And it just makes our job a little bit easier to know whether we're trading inside a range, whether we're... I have to let the Cavalier in, like he's deaf, so I can't actually tell him to do whatever. So I will be back in just a second. He's in. So if I don't let him in, he's just gonna scratch at the door relentlessly. Like one time he was scratching for like a full 90 minutes because I wouldn't let him in. And he was just like, and because he lost his hearing a couple of years ago, 3 years ago, you can't even tell him anything. Like he's adapted really well to it. He's obviously a dog. But I can't, like if I don't have eye contact and my door is closed, I can't communicate with him because he can't hear. The funny thing is, some of our other dogs have realized there's something wrong with him, but they don't quite understand what. So then when he's outside and he's scratching to come back in, they growl at us. They're like, "Arr, arr." I'm like, I can hear him. He can't hear Lisbon. And she's like, what? And then we have Crichton, who also does that. Desi says the Dash 25 code still worked. If you've used it before, then no. Then no. It's going to be a no. Because it's only a one-off. So once you signed up for it, you can use the code that they've given you when we rolled out the new dashboard. So otherwise, it's, I mean, it probably still works for new people, but how many people are now completely new to the new dashboard? Probably not many. I still have to be on the old dashboard because I'm the legacy. If you don't know, I've been with Topstep in some shape or form for 10 years. I was their first female funded trader, and that's how I got to know everybody. And then I got invited to do Squawk Radio back in the day. So Eddie was running that. He was the host. And then Hogue was there as well. And MP, who called himself Nebraska back then. That was his username. Because we all had like silly usernames and stuff. And so I got to meet everybody. And obviously, I started on TopstepTV about 2 weeks after they rolled it out. So I'm part of the original crew. Me, Coach Hoop, obviously Hogue, Eddie, MP. Funny thing is, I never used to see Andre much in there before, back in the days. So when I met him, I was like, oh, so you're the mystery guy. Because I knew about him, I knew of him, but I've never had the pleasure before we started TopstepTV. So yeah. Uptown Dunk says, Dee, I don't get to watch a segment much being in America, but you're actually goated. Thank you so much. Yeah, thank you. Appreciate that. It's very nice, very kind. Angia says, I admire you and Coach Dakota a lot. I look up to you too, humble and talented. Yeah, I mean, markets humble you, you know. If you're like one of the traders who's like, yes, I'm the God's gift to trading, at some point you realize you're not. Like, no matter how good you are, no matter, you know, how great you think you are, and, you know, I'm always suspicious whenever I'm outperforming myself and I get like 2 months with like very few, very controlled losing days. And I'm like, that is an outlier. Because I usually expect 3 or 4 days of a streak, then one small losing day. Then 3 days, 4 days of a streak. So when I string together like 10, 20 days of good trading, I'm like, this is an outlier. And at this point, I look at everything as a norm or as an outlier. So trading kind of definitely gets you into the probabilities mindset. Shay says, did the 70K loss hurt more because you moved the stop? Oh, yeah, absolutely. It was both, actually, or was it the cash? It was both. So it was the pure, sheer disappointment in myself that I felt when I lost the account. Because I was like, how muppety are you to build 2 years of something and then to lose it in the space of 2 weeks? So I vowed back then that I will never, ever, ever do that again. And I never have. Like the other loss was a result of the market locking me in. So it wasn't anything to do with my mental side of things. But the 70K hurt a lot because I broke every rule that I had. And it was, I was treated like that. So yeah, it definitely felt worse, that first one. But, you know, I've always been a very strong person. You know, I'm somebody who had a pretty interesting life growing up in former Yugoslavia. And, you know, we're used to drama. And, you know, losing cash, yeah, it hurts. But ultimately, it's all part of life. So it's like, it is what it is. From where do I draw ADR? Day open or London? Yeah, it's effectively from Globex open. And then I start from half up, half down, and then I start tracking highs and lows as they develop. So obviously at first it will be static, but then as soon as Tokyo starts to move it, it starts to move with it. And then until one side is exhausted, exceeded, that is basically it. Come on, Gamma Wall. See, this is why London is so London at this time of the day. It's gone into a range, hasn't it? So if we look at these candles, let's go down to a 15-minute chart. Yeah, so it's now trying to print a range, and it's still above the initial balance. So I can't do anything here. Like, I literally have to just stay in, commit to the trade, get stopped out if necessary, and then wait until later on. But it's a range. Like, it is a range. It's so annoying. There it is. You can see it best on a 5-minute chart. So that's the high, that's the low, and we're just wagging around it. Initial balance is just underneath here. So we'll see. Yeah, before I started these streams, I never traded gold this early, ever. I always traded DAX for this time of the day. And, you know, at some point we will get DAX. It's not like, oh, it's off the table. No, it's coming. They just have other things that they're working on. So they had a lot of trouble trying to implement it. Ross says, never thought to name my setups. We'll do that. If I'm still struggling, I'll try electric shock treatment. Yeah, I was jokingly saying that to my previous VIPs, that there are these like shock wristbands, and you're supposed to shock yourself. That's the only problem. Where I would like to have, as a coach, I would like to have, I'm just joking, by the way, if somebody thinks that this is serious, get a life. So yeah, if there was an electric wristband with a shock property that a coach could use remotely, That would be amazing, because that would be proper negative reinforcement, right? It's like you're looking at someone trading and you get an alert that they've sized up massively past what you agreed on, and you just go zzz, zzz. That would teach us that but you know, getting hit, I would think getting hit on a massive size, doing what you're not supposed to be doing, wouldn't that be like enough of a deterrent? But there's something really odd with trading where that's not enough. Like the pain that you experience when you break your rules and mess up and lose an account, it is not enough to stop people doing that all over again. So this is why I think it's a complete sort of lizard brain moment where it doesn't have any rational thinking behind it. It doesn't make sense. And it really is just that survival instinct kicking in. It doesn't know about VWAP. It doesn't know about the auction process. It just wants you to survive. And it's trying to protect you. And it's like ill-mannered and misconstrued way from harm, from the death threat that is the market. It's like it's just some cash. It's not a lion. So it always, like, to me, it's endlessly intriguing that we behave that way, but also very, you know, very expected. Because if you think about it, when you're afraid, and I'm going to just pull up an example from, you know, a movie about a serial killer, and you see, you know, he's chasing a girl, and she's like, oh, like, you know, afraid and everything, and then she gets to the door, and then she's fumbling around with the keys and can't open up the thing. And it's why? Because, you know, fine motor control goes right out the window when fight or flight kicks in. So that's also a sign of your primal brain taking over, not having fine motor control. So I don't know, maybe we can like knit or something, and then if we're like knitting, if you're knitting, it requires fine motor control, presumably. I don't know, my sister would know. And then you start fumbling, that means your fight or flight is definitely kicking off. What's another fine motor skill that we could maybe use to figure out if your brain has checked out or not? I suppose music, although with musicians I don't know. With me, it doesn't matter what state I'm in, like my motor control is still pretty good. Not that I've done, you know, too many gigs where I was like super wasted or anything, but there were a couple, let's put it that way. And I was always able to, like, whenever I listened to it afterwards, I was like, no, that still sounds okay, actually. Weird. Because you would expect to sound like a complete idiot, like everything. But yeah, if we can find like a fine motor control activity, that might... Right, it's touching the bottom of the range. Touching the bottom of the range. What's going to happen? What is going to happen? So right now I'm just in observation mode. I've got a position that I wanted, and now it's down to the market. Like, I've got no input into what happens next because I've already made my choices. And now the exercise that some of you are like, oh, I want to take things off. The exercise is that as it's kind of doing what you're not expecting it to do, or being annoying, like right now, that you can't click, because that's, again, your primal brain saying, oh, I'm afraid, oh, it's gone into a bit of a drawdown there, it's going to lose. So what? So train yourself to be okay with losing a trade. Smacks you in the face, and you just go, okay, so I either got something wrong, or my stop loss wasn't big enough, or the setup just wasn't there anymore. So we'll see. All right. Spiky gold, spiking down to initial balance now. I don't know if 70 ticks is enough for this. I mean, these candles are just absolutely enormous. I'm really happy I'm in only with one, I can tell you now. Because imagine if I'm in with one mini, this would be like 700 down the drain. This would have been difficult to stay in and like be calm and talk through it if I was in with bigger size. Alia says positive is Slovenia. I'm really surprised to hear that you're from former Yugoslavia. Thank you so much for your knowledge and experience. Pozdrav iz bivše Jugoslavije, iz Srbije. Ovdje Beograđanka, Zemunka. I was born in Belgrade, but I grew up in Zemun mainly. Don't know how much you know about the Belgrade suburbs. Right, Gold, what you gonna do here? You're exhausting the ATR of the candle now. Uptown Dunk says, as I misspelled the word, it's time to log out. Your username reminds me of this guy on TikTok. He's called Jubal, and he does these like phone pranks. And it's quite funny. He's got this one character, and he changes his whole thing called Donk, and then he calls people, and he kind of pretends that he's like a doctor calling for like the procedure and stuff, and people are absolutely freaked out by him. And then he's got another one that sounds super creepy. He calls him Juniper. He's like, hello, are you ready to get things organized? And most of the time, people like want to call the police on him. And then he kind of tells them. It's quite funny. So your name, Uptown Dunk, that reminds me of one of his characters. It's quite funny. Is Eddie returning? I don't know. Like I said, Eddie before, you know, he had a mild stroke. So obviously we don't want him to come back until he's like 100%. It was a small one, definitely a small one, but we want him to be healthy, right? So as long as he needs. So yes, I'm guessing at some point he will come back, but you know, recovering from a stroke, that takes time. So we need to be patient with our good old Eddie. I do miss him. I love Eddie. Eddie and I always used to have like jokes. And there he goes. Yeah, okay. So I'm going to lock this out until fast markets because, I don't know, I just can't work out like the metals for this time period. Anytime I think, oh yeah, you know, worked it out, they just either do nothing or they just completely like reverse. So I'm going to stick to my time of day. And it obviously makes these streams very tricky because I still feel like I need to trade here. But yeah, whatever, like right now, failed auction. Do I want to go against the ATR low? No, I don't. And just the size of the candles, I can't size down more than 1 micro. And I don't know, I might move to something else. I might move to copper or something, but whenever I lose 2 things in a row, I don't keep trading that same product. I just go, okay, not reading that pretty well today at all. Let me find something else, and then I will either go to an uncorrelated asset like RBOB or something like that, or I will stay out completely. Like obviously today I'm not going to be able to stay out because I am on fast markets. So again, trouble of a streamer. But if I do anything with gold today, it's got to be somewhere after the euro close. Otherwise, you just get into this like, oh yeah, I'm going to try this, try that, try this, try that. And then you start flipping and flopping. So for me, 2 losses on a product, I'm like, I'm out. Like I'm not reading it well. And you have to be honest with yourself as well. You can't just be like, oh yeah, let me see if I can get it back. Well, this one's not playing ball today. And I'm suspecting for me, my stop is still too small for this because this is just going to whip out back. Okay, God. This is what the large ATR does. You use a 70 tick stop, you think, oh, that's large enough, it's massive. And then it goes into 173 tick width of candles, and you're like, well, what am I supposed to do? Use a 170 tick stop? I don't think we're in that kind of a situation just yet. But yeah, so I'm going to do a little bit of analysis to see what would have worked here. And in the meantime, I'm going to look for another another setup somewhere else. So maybe I will go to like natural gas or something. Just literally something completely unrelated to the metals. Otherwise, you just get into a spin cycle, and then you're like, I both of mine were long. I still want to be long. I do not want to be short gold. But it's just I have to rethink the size of the stops here, which means I have to rethink my daily loss limit as well. May give myself a little bit more rope to hang myself with. Anyways, that's it for today. Yeah, be careful of gold. Like, these candles are just absolutely ridiculously enormous. And yeah, let's see what the day brings. Equities also for me outlier day. So ADR was not, so just to end the stream, thank you. ADR was not reclaimed, and in fact it acted as a bounce point for another leg down. So now there is a range here, but until the ADR is reclaimed, I'm probably gonna be a little bit short biased on equities today. All right, that's all for now. I will see you a little bit later for fast markets. Be very careful, size down, slow down, and work on your skills. So your homework to work on would be to name your setups going forward. Put them in a flow chart. Put them in a plan somehow. You know, track them. I even have it tracked in Edgewonk as well. But yeah, it's that time to level up your skills and to know which setups you're getting involved with. And that way, if you get whipped out of a setup, you're still like, okay, well, that was a sustained auction that didn't work. So then you go, how many times that didn't work? Oh, about 35%. Okay, so that goes into the other side where it didn't work. So that's your homework. I will see you a bit later. This was the Euro Trade. I'm Mark Stoker D, and I will see you soon. Take care.